Hello, clients and house hunters out there. Hope you're doing well. Andy Tuttle here with the Tuttle Group. Remember, we do this every week. It's a weekly market update just so you're empowered when you're out there shopping for a home. We know you're looking to buy, and there's a lot of activity happening. You're hearing a lot of noise. I'd like to cut through that for you and give you the real stuff instead of the media spin. Media misses stuff, plus there's just a ton of marketing out there that is usually late and misleading. So we want to make sure we're communicating to you the truth, the facts, and things that may help you. So what we're going to show you in a second is what we do all the time, which is the market bond chart, right? So it's a price chart, and we'll show you that in a minute. But first, talk to you about what's happened this week. So as you know, since Brexit was announced a couple of weeks ago that they left the EU, we saw the bonds price improve greatly, and we've seen a nice rally really consistently the last couple of weeks with a couple corrections, which are normal. And then the jobs report came out today. Now, we expected that jobs report to be way better than the 180,000 jobs expected. It was that. It went at 287,000 jobs. Typically, when the jobs report is that much higher than expected, the bond market suffers. But it didn't this time. And the reason it didn't this time is because what the media still hasn't figured out yet is that it's when you dig into the numbers, it's not as great as it seems. One, the job markets, most of the jobs that were created were in the same market. So they were in the same industry. And sorry, not same industry, same demographic. So most of the jobs, 250 something thousand, were all for people 55 or older. Only 28,000 jobs were created for people in that 25 to 55 age bracket. So these older people coming back to take part-time jobs, they coming back into the workforce after being a while. Is it sustainable, right? It's not. You want to see the job growth down lower in the 25 to 55-year-old range, okay? And so because of that, that wasn't fantastic. Kind of tamed the report a little bit. Also, the May's report went down from 34,000. It was revised lower to 11,000, and we've seen the reports from previous months and the jobs report. Here's a little chart of that, so you can kind of see the just year-over-year job growth has been under 200,000 in the last few months. Has not been great. And so whereas 2 years ago we were at over 200,000 jobs a month, right? And so that when you take everything out, the jobs report was not as great as it may have initially seemed, and so the bond market kind of rallied. So here's where we're at. This is the price chart again. So the higher the price, the lower the rates. This is Brexit announcement. Huge gap up opening in price, and then really the last 8 trading days continue to ride a high, and then just kind of leveling off and creating a new trading range here. This was today's jobs report. We saw it start low, but it really fought back after digesting the news of the jobs report, and we saw ourselves stay in this same trading range. So something for you to look at here. So you can see the trading range that we're in. It is a tight trading range. We've got overhead resistance technically right here, so it's going to be hard to push above this to see better rates, higher price, lower rates, but we've got good support right here. So we're probably going to see ourselves in this channel over the next week unless we get some crazy global economic news or some very, very positive current economic news happening here. So when those earnings reports come out, if they're really shocking for some companies, we may see some move down into this lower range. Otherwise, we'll expect some range-bound trading over the next few business days. What does this mean for you? It means that if you got pre-approved way back here in June, late June, your rate may be a half a point or better now, which means you may be able to qualify or feel more comfortable with your payment for an extra $15,000 to $25,000 in purchase price. That may help you either be more aggressive with an offer, or it just may help you get into that next neighborhood knowing that you can make that payment because you may be at the high end of your range and it still makes sense for you. You know you can still make your other payments and save for retirement and college and all that, but you're just really tight. So put yourself in a position. Call us. Again, we'd love to talk to you. If you're just on the blog, talk to your lender or call us. We'd love to make sure we walk you through that and let you know where rates are and what that means for you if you're out there making offers this weekend. So get out there. It's crazy out there, but I know you're working with great realtors because they're sent you to us for the most part, and we know they're taking care of you. Call us if we're here. We'll be calling on all your offers you're making. We'll be calling listing agents all weekend long to help you get that edge. So just know we're here for you. We're on your team. If you need some help, give us a call. If you want us to run new numbers, you can email us. You can call the main number, and we will be here to take care of you. So have a wonderful week. Happy hunting out there, and we will talk to you soon. Take care.